Hey, today we're going to be working on QuickBooks Premier Accountant Edition 2010, working with Wiley Plus, question AP5, TAC 1. You can see up here we got Jansen's Hardware Store. Jansen's Hardware Store, it's going to be the name of our company that we're working with. This is your main basic screen. You got a lot of options down here. You can look at your sales receipts, your bills, you can see the company, the banking. It's not extremely complicated, but there are a lot of options that you can deal with. We're going to be working the accounts tool mostly. You can see the chart of accounts, $8,000 cash, $8,000 common stock. When you first click on this, there's going to be a lot more accounts in there, but you have to deal with them. At this point, we can go down, start making our general journal entries. Make sure to check the date. Date's always important. Make sure to check the entry number. From there, it's a simple process. Question 1 is just going to be the transfer of information for the entire month of May. You can see it starts us with $8,000 cash, $8,000 common stock. So, May 1st, purchased merchandise on account from Banco Wholesale Company for $8,000, termed 110, net 30. Pretty much just insert it, get our $8,000 inventory, and then accounts payable, $8,000. You can see it autofills for you. Put in a little note there, a little memo to ourselves, terms 110, net 30. That way we know that if we pay it within 10 days, we get our discount. You always need to have someone, a vendor or a customer, whenever you're doing accounts payable or receivable. Alright, save and new. Make sure to change the date. I usually forget sometimes, but it's very important. It's a useful thing about QuickBooks, you can change it. So we go over to 2. Sold merchandise for $1,400. So accounts receivable, or $4,400, excuse me, accounts receivable. Sales inventory, or sales revenue. Put in a little memo there. Put in the terms that we have going on. Put in the terms here in a minute. Cost of goods sold, this is going to be a double entry, $3,300. And of course, take it out of the actual inventory itself, $3,300. Add memos. Memos are extremely useful. When you start looking at the general ledger, it's going to tell you what's going on. You always need a customer once again. Alright, moving on. May 5th. It's going to be returned. So we receive credit from Banco Wholesale Supply for merchandise returned for $200. So accounts payable are going to be debited $200. Merchandise is going to be credited $200. Memo to myself. Returns. Save and new. Well, see once again. Whenever you need accounts payable, accounts receivable, you always need to have who it's going to, where it's coming from. This will come in useful later when you start looking at your income per customer and payout. QuickBooks system's pretty much covers everything you could need for your basics. When you first start it up, it has an interview process that you guys will become familiar with if you use it. Interview process asks you everything about your company. I had to skip through most of it because obviously this is not a real company. It tries to connect to your online bank accounts. Alright, brings us to the next. Received collections in full. Minus discount from customers billed on May 2nd. Alright, remember that discount was terms 210 net 30. So, debit cash. Not looking for any more credit. Autofill can be useful, but it also can be slightly annoying sometimes. Debit sales discounts. And boom, autofill does the rest for you. Just got to put in the name. It's going to be accounts receivable. And that is from customer A. Alright, save it next. May 10th. Paid Banco wholesale supply in full, less discount. So just keeping in mind that we also had a $200 return from them earlier. We're going to go ahead and debit accounts payable. As we recall, debits for any of our liabilities, lessens them, credits increases. So we're going to debit our accounts payable the full value of the $4,200. There we go. Next we credit cash. Credit of the cash is going to be minus the discount, and then the rest goes off the inventory. It's good to have a calculator nearby for when you're going to do these little discounts of this sort of nature. I myself can't do 4,200 times 0.01 or 0.02 in my head. So inventory gets credited. Why? Because that's how much the value of the inventory is. Remember, fair value. If you only paid $41.58 for it, that's all it's worth. And that's going to Banco Whole Supply. Alright, save and new. May 11th. These ones are easy. Purchase supply for $900 for cash. So supplies, $900. Cash gets credited. $900. Once again, there's that autofill. Put a little memo. Autofill is a useful feature because keeping in mind all debits must equal credits eventually. You'll see at the end of this tutorial the balance sheet. Anyone who's been doing accounting knows balance sheets always have to equal. Basic equation, assets equal liabilities plus stockholders' equity. May 12th, taken care of easy. May 15th. Refunding some poor merch. Pretty easy. $230 refund. Get our cash back, but it credits the inventory. And put in the memo, return of poor quality merchandise. I use merge for short. Shorthand makes everything go a little faster. And scrolling down. May 17th. Purchase merchandise from Strickler Distributors for $2,500. Terms 210 net 30. If you wonder why I say the 210 net 30, the 210 means you get a 2% discount if you pay it within 10 days. The N stands for net. 30 means you must pay it from 30 days of the issuance date. So I put in that little memo to myself. Terms 210 net 30. You always want to take advantage of your discounts. And of course, you need to have a person who you purchased it from. We need to add a new one here. It's pretty easy, vendor. It asks for a lot of information. We're not going to put any of that information down because this is a fictitious company. But as you can see, it'd be useful now. Date, once again, it brings us to September 24th, today's date. Let's change it back to May 1st, or rather May 17th, the day of opening our business with this individual. It's useful how it works with today's date. That's almost a control measure right there, internal control measure. Because it always jumps to the date of today. It makes it more difficult for people to backdate it. Alright, now we jump up to May 19th. Paid freight, May 17th. Purchase $250. That increases the inventory cost, decreases cash. Pretty easy. Alright, now we sold merchandise for cash, $5,500. The cost of merch sold was $41. This will be another one of those double entries. Cash, $5,500. And sales revenue, $5,500. We're going to debit cost of goods sold, the $41. And we're going to go ahead and credit inventory, $4,100. Reason being, cost of goods sold. Next, May 25th. Purchase merchandise from Fasteners Incorporated for $800. Terms, 310 net 30. Go ahead and put that in. Oh, I forgot to change the date. Or rather, I put a date. Always remember the date. Date is important. Mentioned earlier, I'll forget it sometimes. Keep in mind, in real life, you'll be doing this per day that it happens. You won't be fulfilling a month worth of journal entries in 20 minutes. Alright, so back to what we're doing. May 25th, purchase merchandise from Fasteners. Means we owe inventory, gets its $800 worth. And accounts payable is $800. Go ahead and memo in the terms, 310 net 30. No, hold on a second. Gotta add our vendor once again. It's a new vendor. This is going to be Fasteners Incorporated. Same basic principle. It's going to want a lot of information, which is useful if you have your own company to know who your vendors are. One quick tick. I made a mistake. Now this happens, and it's very useful when you make mistakes. I actually wrote this one on purpose so I could show you the back feature. I was going to show you the feature of where you could open up the general ledger. You can adjust it from there, but I don't want this to take too long. I'll show you the general ledger at the end. Adjustments can be made from there as well, same as I showed you from here. This is where the save and new comes in handy, because you can go back and forward, back and forward. If you do save and close, you're going to have to reopen the whole process again. It's not too difficult, pretty easy. Strict distributors, and then forward, see. Change the transactions. I'm glad it tells you that, because it lets you know that you changed something, which will appear on the general ledger later. Alright, back to where we were. May 27th. We pay Strickler distributors in full, less the discount. Remember, we purchased it for $2,500, terms 210. So 2,500 times 0.02 rather, excuse me, gives you the 2% amount. $24.50, and then that's going to come out of our inventory value. Name, Strickler Distributors. Noticing that we've paid him in full now. No longer need to pay him back. Alright, next thing we do, put in the date, May 29th. Looks like we have a return for merchandise, a value of $124. The merchandise itself was worth $90. So we go ahead and put in here sales, returns, and allowances, $124. Remember, sales, return, and allowances is going to be a contra revenue account. Cash, $124. We had to give them their cash back. Inventory, it gets debited $90 because we got that back. And cost of items sold, goods sold, also gets credited $90. Take that away. And just put in a little note, returns of merchandise. Pretty easy. Alright, next. Alright. Let's do our final entry, May 31st. Sold merchandise on account for $1,280. Terms is just net 30, which means there's no discount. It means they just owe us the money by the 30 days after this point. Sales revenue, 1280. Alright, once again, value of the goods sold. Debit cost of goods sold, $830. Inventory, $830. Go ahead and put in that little note, net 30. And then, of course, it needs a customer. Anything done on account needs a customer or a vendor. Alright, save and close. That's the last of that. Alright, once you've done all that, there's several different reports you can look at, several different things you can look at, most from here. I prefer the Accountants tab. Look at our chart of accounts, see how much cash we have on hand, see how much supplies we have, things of that nature, merchandise. Go to reports, go down to banking, or company and financial rather. Balance standard, your standard balance sheet, get your assets, liabilities, equity. See the assets equals liability plus equity. Go down again. We got our trial balances. Trial balance comes out good. Alright, looks good so far. Keep looking through. There's a bunch of other ones. General ledger, it's going to combine everything. Alright, there's everything that's been input. Everything comes out to 0, which is good. Everything I put in equals everything that should be coming out. Not making no deposits. Statement of cash flows shows what we've done, what's came in, what's gone out. It's pretty easy for you. From here, to get that retained earnings statement, you've got to set a closing date. Now this closes for you, which is very useful. It tells you here that it'll automatically take care of everything, automatically sets everything into the return earnings statement. Also a good control measure to close out so no one can change it. I myself don't have any need to close it because this company is not real. That's your general overall standard, but if you do have any issues, the tutorials are extremely helpful. I watched a couple myself. You can go to help, find training, go to online. You can talk with other people online. Once again, you can view the tutorials itself. You can find training, find support, find local experts. There's a lot that you can do through QuickBooks. It's not super expensive either. It's pretty easy to use once you've learned how to do it. That about sums up our general overview of QuickBooks Premium Accountant Edition of 2010. I hope you enjoyed it.